higher in today's session. But in our Midcap Spotlight, Vamakshi is joining in to focus on Dynamatic Technologies. The stock is up over 4% after brokerage ICICI Securities initiated coverage with bullish calls. Vamakshi, tell us more about the stock.
Well, yes, Ormas, the stock is up and away in the trading session today. There's brokerage note that came in from ICICI Securities, and they have highlighted that the company operates in mainly three segments, which includes hydraulics, aerospace and defense, and metallurgy. Now, each segment contributes nearly 1/3 of the revenue for the company, but they believe that the aerospace segment is expected to likely drive to earnings growth ahead. The company is the sole supplier of FTBs, that is flap track beams for Airbus's nearly 86% order backlog. In fact, recent order wins for flight critical aerostructures signify higher participation in the supply chain of global aerospace OEMs. Increasing potential of regional connectivity in India is also likely to open up a market for the company in the near future. The total order book, according to ICICI Securities, stands at around 16,000 to 17,000 crores, and the order book for the aerospace business is somewhere around 11 to 12,000 crores, which is expected to be executed over the next 10 years. So there's a good visibility as far as the revenues are concerned. In fact, they expect overall revenue to triple for the company and aerospace to double over the next 10 years as compared to FY23. The share of revenue for aerospace and defense is also expected to rise from around 34% in FY23 to 45% by FY30. As far as the other two divisions are concerned, they are also turning a fresh leaf. They're expecting demand megatrends for tractor as well as construction equipment to be quite strong, which is why this is a positive for their hydraulics division. But apart from that, their metallurgy division, the company continues to gain from Germany, revving up its defense spending. They will be requiring artillery shells, which are currently under development at its Erla site. They're expecting gross debt to come off by almost 25% on a year-on-year basis at 350 crores by March 24. Significant free cash flow generation is also likely to make the company net cash by FY27. Recent order wins will likely propel the EBITDA to nearly double of FY23 by FY27, and in fact the EBITDA margin is also expected to improve to around 17 to 18% as compared to the last 5-year average of 13%. There's also comfort as far as the valuations are concerned. Company trades at some 35 times FY26 EPS as compared to nearly 45 to 60 times to other peers in the aerospace ecosystem. So largely a positive note coming in from ICICI Securities on Dynamatic Tech.
Okay, up and away. Thank you so much, Vamakshi, for joining us with that update. The other stock on our radar is GM Breweries. That one is also